Hi everyone, Paul Lang from Disciplined Trading Strategies with this week's Trade of the Week video. This is for the week ending 8/25 of 2019. The stock was Disney. This happened on Wednesday the 21st. The strategy was based on a 60-minute minor support play entry on a 2-minute DBO. We need to talk about that a little bit on this play when we get to it in just a minute. Management simple, reward to risk about 2.1 to 1. As always, let me remind you of the free stuff this week at DTS. Monday is the bi-weekly scanning night. I do want to point out that every time I do a long-term play, it is usually discussed this night. I don't always know that night because we're scanning and looking for things. But about 90% of the time when I take a long-term position, it's from the lists that I create, and these lists are reviewed on the bi-weekly night on Monday. So it's a great time, not just educationally, but for actual practical lists that you can look at and perhaps even use yourself if you know what to do with them. If you're receiving this Play of the Week video in your email, you are a member, you'll get your invite. If you're seeing this somewhere else, you need to go to the DTS website and make sure you are a member to get invites to Monday night and to all the free educational stuff at DTS. The daily chart of Disney. The daily chart was not critical to this play. It was not strategic to why I chose it. It actually was just simply not negating this play. In other words, it didn't stand up and say I couldn't do this play. There's nothing great about it here. It did hold a higher low on the daily chart. That's what I wanted to see. And it gapped down that day to kind of nowhere. It happened to run up. The daily chart, not critical to this concept. The hourly chart was originally the reason I was looking at this, because as we close, this is the prior day, we closed in the support area. I was looking for us to continue this new hourly uptrend. A little fuzzy on exactly how I came across this one because I don't love that chart either. But what happened this day was we ended up gapping down to that hourly minor support area and holding and then running up that day. So again, the hourly chart actually didn't love this. This is an unusual play because I believe I really hunted it down during the trading day, and like the intraday pattern and the relative strengths were the key things on this one. The hourly chart was good. It backed the play up. I don't think that would be a strategy I would normally chase though, because it wasn't all that great, but it did promote the long that was taken mid-morning. Here is the 5-minute chart, and this is just here. You don't really see the entries, targets, or anything on here. This is just here to show you the support area that held. That's where we opened the day of the trade. And that's where we ran down. We flirted down that first 5-minute bar and hit that minor support area, which was a really nice one. And then here you can see the consolidation that formed right in here. That is actually a strategic when you do form that consolidation just prior to the gap fill and you hold like that. And the other thing that was key to me on this one, I was scanning during the mid-morning because we had a bullish market day and I had a bullish market bias, so I was looking for longs. And the market, this is the QQQ that same day, the market gapped above the prior day and ran up. Now, the stock, of course, initially gapped down, which was weak, but you don't really count the opening in terms of relative strength or weakness. That's the gap that happens. That's a separate issue. But what happened then, as the market pulled back right in there, that's when Disney consolidated in a very nice little manner there. And the rally later in the day in the Qs helped promote this to make this a really nice run. This is where actually everything ended up happening on the 2-minute chart. Here's that consolidation that formed. And again, part of this concept, a lot of people think this is a bearish setup, but it's not typically. Stock runs up, does the little gap fill, but then holds like a rock sideways in here. And that was when the market was pulling back to its support level. So as the stock broke out, the market was just coming off its bottom on a bullish setup. Entry 134.91, stop 134.53, basically just playing the breakout play, giving it a little bit of extra room on that base. Didn't need to. The stock ran up and continued up. Did a good job on target taking. Target 1 was 135.67. And these areas in here, that was the high for the day right there. So really a good job. I tried to get more out of the second target. I got a dime more, and it just trailed out over here going into 2 o'clock. You don't see it on any of the charts, but you can look yourself if you want. It didn't go anywhere. It just ended up trailing out. Overall, very nice play, though, about 3 hours on that Wednesday morning. This, like all the other plays that you see in these Trade of the Week videos, are done in the DTS trading room, where we get together, try and find a handful of the best setups, hit the morning hard, and try and get the job done early in the day. If it sounds interesting to you, check out the DTS trading room. You can see it on the services page on the DTS website. Until next time, this is Paul for DTS. Good trading, everybody.